In today's video, we'll dive into an in-depth analysis of Sofi stock and how the broader market developments are impacting it. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Recent updates from Jerome Powell and the Federal Reserve have stirred significant reactions in the financial markets. Today, we saw confirmation of a 25 basis point rate cut, marking a pivotal moment for investors. However, the projections for 2025 and 2026 have shifted, with the anticipated number of rate cuts reduced. Specifically, the forecast for 2025 has been adjusted from 3 expected cuts to just 2. This adjustment sent shockwaves through the market, sparking what many consider an overreaction. Inflation is also expected to remain somewhat elevated, contributing to the market's volatile response. So what does all of this mean for Sofi? Even in a worst-case scenario, Sofi's revenue growth could see a modest decline, moving from an estimated 35% to around 30%. However, the overall outlook remains optimistic. Sofi continues to show strong potential for next year, with profitability and growth expected to surpass last year's performance. Additionally, Sofi's various business segments are gaining momentum. The Galileo platform, a core part of Sofi's operations, has seen an impressive streak of deal closures, with 3 significant deals finalized in just the last 90 days. This demonstrates Sofi's ability to diversify and expand its revenue streams effectively. Adding to the optimism, insider buying has been a notable trend. Key insiders recently purchased shares at around the $16 level, signaling confidence in the company's future. Today's market movements presented a prime buying opportunity for investors. Despite the broader market's reaction, Sofi's fundamentals remain intact, making this dip an attractive entry point for those looking to invest. Looking at the broader market, we're seeing significant pullbacks across various sectors, particularly within the S&P 500's top performers. Some of these companies, which have experienced years of rapid growth, are now facing slowed momentum. In contrast, Sofi is entering an acceleration phase, which makes the current pullback in its stock price seem exaggerated. As the market processes these developments, we could see a rebound, potentially culminating in a year-end rally. This dip presents an excellent opportunity for long-term investors to buy in before the market adjusts to these changes. For those who've been waiting for a buying opportunity, the 13% pullback in Sofi's stock price today could be just what you've been looking for. It's rare to see such a significant dip caused by a relatively minor adjustment in rate cut projections. A reduction from 3 to 2 cuts for 2025 shouldn't have led to this level of market reaction, highlighting the potential overreaction from investors. This pullback is not limited to Sofi. The fintech sector as a whole took a hit today. Companies like Upstart, Nubank, Robinhood, Affirm, and Coinbase all experienced double-digit percentage declines, with Sofi itself down approximately 13%. Small-cap stocks, represented by the Russell 2000 index, also faced significant pressure, declining by about 5%. Such a drop in a small-cap index is substantial and highlights the broader market's challenges. Sofi's decline is part of this trend, but it's important to recognize that this is more about market sentiment than a reflection of Sofi's underlying performance. Today's dip saw Sofi's stock price retreat from recent highs of $7.19 to approximately $14.90. Despite this, the company's long-term prospects remain solid. Looking ahead, Sofi's growth trajectory appears resilient. Even if growth rates moderate slightly, the company is still on track to achieve impressive year-over-year improvements. For 2024, Sofi is projecting growth of approximately 24%, and this figure is expected to increase in 2025. The current phase of EPS expansion positions Sofi well for sustained growth, even amid broader market uncertainties. Jerome Powell's comments today further underscored the complex dynamics at play. While the rate cut projections for 2025 were adjusted, Powell noted that the economy has successfully avoided a recession, contrary to predictions made over the past couple of years. This positive economic backdrop supports the case for long-term investments in fundamentally strong companies like Sofi. Another factor to consider is the activity around options trading for SoFi. The sheer volume of call and put options expiring this week highlights the heightened interest and volatility surrounding the stock. Such activity often reflects market makers' strategies to capitalize on retail investor sentiment. Today's pullback may have been exacerbated by these dynamics, creating an opportunity for savvy investors to step in. Management's recent actions also speak volumes about their confidence in SoFi's future. Insider buying at the $16 level, coupled with the company's ongoing efforts to drive growth across its business segments, underscores the strength of SoFi's fundamentals. The slight increase in inflation projections for 2025 from 2.1% to 2.5% is unlikely to derail SoFi's progress significantly. At worst, growth may see a modest reduction from 35 to 30%, but this still represents robust expansion. In conclusion, today's market reaction to the Federal Reserve's announcements appears to be an overreaction, particularly for companies like SoFi. The fintech sector's long-term potential remains compelling, and this pullback provides a valuable entry point for investors. As we look ahead to 2025, SoFi's focus on innovation, profitability, and diversification positions it as a standout player in the market. Whether you're a long-term investor or exploring short-term opportunities, now is the time to consider how SoFi fits into your portfolio strategy. Remember, these moments of market turbulence often present the best opportunities for those willing to act decisively. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.